Today, we're brutally testing an extremely popular trading strategy that combines the stochastic, the RSI and MACD indicators, and claims a steep positive equity curve and triple-digit returns in just 100 trades. It originates from the very prominent trading channel TradeIQ, which has nearly 200,000 subscribers. This video has more than 50,000 views, so we're going to backtest this strategy ourselves by finding 200 signals over 6 different markets and 6 different time frames, all chosen at random. Greetings fellow Charties, this is Ed here at the Trading Lab, your #1 manual backtesting channel where we test a new popular trading strategy every week, trying to separate the truly useful from the clickbait nonsense. Here we test every strategy the exact way a real person would trade it, trying to find the best of the best to use as a basis to build our own systems. When this video is done, you'll know the win rates for both scalping and swinging, the average return per dollar risked, the maximum drawdown, and the average number of candles between signals. We also tell you a stat that most traders want to know but can never quite figure out, which is how many trades a day on average do I need to earn my daily nut? Our testing method remains consistent, following a specific set of rules for each backtest, so every strategy can be compared with every other. A pause if you want to read the rules that are on the screen right now, or watch my very first truly awful video. Sorry about that. But there's a lot of detail in that one, far too much detail to be honest. But here's the gist of it. Our randomizer spreadsheet picks 6 random markets, each with an arbitrary time frame, as well as a random place to start the testing. Then we go bar by bar to find 200 signals, entering each with a simulated stop order just beyond the signal bar. Initial target is 1-to-1, risk to reward, where we move the stop loss to break even in one scenario and don't move it in another, and count it as a full winner if it gets to 1-to-2. We cancel trades that don't trigger after 4 bars and close trades that just putz around for 40 bars without ever getting their act together. This TradeIQ strategy we're testing today uses the 3 standard indicators included in virtually all trading software: Stochastic, RSI, and MACD. After you add them, they look like this, but then we'll make some minor changes. The new settings are listed on the screen, and these make it easier to find the signals. The search for a long signal begins when the stochastic passes into oversold territory below the 20 band. Every new long signal needs to start this way. Then you wait for the RSI to cross above the middle line or the 50 line. When that happens, you check the MACD histogram to see if it's showing green. If not, you wait for the first green histogram bar. When all these line up, check back to the stochastic and make sure the stochastic line has not reached and entered the overbought region above the 80 line. If so, it's too late. If it's still below 80, then it's a valid long signal. So you would enter with a stop order set just beyond the signal bar after it closes, and a stop loss set just beyond the swing low, first targeting 1-to-1, then 1-to-2. The short trade is just the opposite. Stochastic first enters overbought territory and starts to move back down. Then you wait for an RSI cross down below the 50 or midline. You check and make sure you have a red or pink MACD histogram bar. And finally, you check and be sure that the stochastic has not already fallen below 20 into oversold territory. If all the criteria are met, enter with a stop order set just below the signal bar after it closes in order to get swept into the market, setting your stop loss just beyond the swing high, first targeting 1-to-1 and then 1-to-2. With this method, only a single signal is valid after the stochastic leaves the overbought or oversold region. You have to wait for it to reset or return to one of the extremes before another signal, long or short, is valid. All right. Now we'll generate the random markets, timeframes, and starting points using this spreadsheet that includes the 28 Forex pairs, gold, oil, Bitcoin, and Ethereum, and including timeframes that range from 5 minutes to daily. I've sped it up quite a bit because I copy and paste very slowly. Here are the pairs and timeframes we're going to check today. While I backtest, why don't you take the next 10 seconds or so to think deeply about your plans for the future. Well, let me tell you, I started to regret my own life decisions after finding the first 25 signals of this loser, and it only got worse from there. Honestly, there were moments during the entire day it took me to find, compile, and analyze these 200 signals that I felt just like that guy in the video. Here are the results, such as they are. The 1-to-1 or scalp win rate was 46.5%, which is well below the required 50% that we use here at Charty's Trading Lab as the very first indicator of a decent strategy. Whether you moved your stop loss to break even at 1-to-1 or not, the swing win rate or the 1-to-2 win rate was a paltry 12.5%, confirming this to be a terrible, horrible, no good, very bad strategy. If you trade this strategy over time, my findings predict that you would lose about 5% of your money with every 100 trades, or about a nickel out of every dollar you risk, and the drawdown is about 20%. So forget about trying to earn any particular amount per day. You just can't do it with this strategy. Here is the sad little equity curve for this strategy. And here it is on our spreadsheet, highlighted in yellow. It's funny that both the version including a break-even stop loss and the scenario without one come in surprisingly higher than last week's backtest. I guess that one was even worse than this. Both these strategies make the one at the top, we'll call that one the least crappy trading plan, seem like a path to riches. That said, we're just getting started here, and it seems like just the right time to ask you to comment below or email me with your favorite trading strategies that you'd like to see me test. Also, I would definitely appreciate any feedback you'd care to give on the testing method itself. What do you like? What would you change? I'd love to hear from you. So I'll be back next week with another strategy to test, hopefully a profitable one this time. If you find the debunking of many of these YouTube touted strategies interesting, and you want to join me in the continued search for the treasure in this here garbage pile, please consider subscribing. The link is on the screen or below in the description. Thanks again for watching, my friends. I really do appreciate you all. Have a great trading week, and I sincerely wish you the very best entries and top tick exits.